Hello, everybody. Welcome. Hi, I am Dennis Lewis. This is Crypto Trader News. And for the second week in a row now, I am really thrilled. We have Stuart Pritchard from Blockman Capital on. He's the expert. I'm the silly guy asking questions that, hopefully I can stand in for some of you guys. I know that most of you out there are going to ask a lot better questions than me. So if anybody has any questions, be sure, we're live, so you can put them on the YouTube comments or you can put them on the LinkedIn comments, and we can pull the questions up here live onto the live stream and answer them. But yeah, I'm really thrilled to get this collaboration going. It was out all over the newswires today, in fact, that CTN is collaborating with Blockman Capital. They bring the brains, we bring a bit of the reach and the audience. And Stuart, welcome one more time.
Thank you very much indeed, Dennis. Pleasure to be here. So looking forward to this.
So yeah, so my idea with these is we're going to, and this is an experiment like everything, so these things can change over time, but we're going to try and give these live streams a bit of a structure so that they're not completely all over the place. And the first order of business should be just let's talk about the markets a little bit. How was this last week? What's going on in the crypto world with trading and tell me, has everything gone down into the tubes, or are we about to take off and hit the moon? I don't know. You're the guy who knows.
Okay, so it's been, I think, to coin a phrase from the sporting world, a game of two halves over the past few days. And even if we look at June as a whole, I'll just share my screen here. If you're able to just share that up, Dennis, that would be great.
There we go.
What I'm looking at here, I'll narrow the range in to begin with. What I'm looking at here is a chart of the price of Bitcoin. We're looking at a 15-minute chart, and we're looking at one of the major exchanges, Binance, which is fairly typical for trading Bitcoin. What we can see is, here's the start of the month here, the beginning of June. The price was trading at around about $9,450. We're currently trading at about $9,450. So we got off to a fairly strong start on the 2nd of June. We can see here that the price escalated very quickly. We've got the volume here on the x-axis, and we can see the price really got off to the races, jumping up here as high as sort of $10,400 before capitulating on the very same day and coming right back down. So a bit of froth came to the top of the coffee, and it was immediately swept away in the afternoon. And really since then, it's kind of been a similar story. The price has tried to gain a bit of traction, running up nicely, and it looks as though it's into a nice upward trend, then gave it up again back down here. And then over the past couple of days, really Monday morning in particular, what we're looking at here is the early hours of Monday morning here in the UK. The price really gave it up and dropped down as low as sort of 8-9 before finding a bit of support and recovering back up to this infamous 9,450 as it stands now. So the reality is, it appears that there's something to have a go at here. If the price has jumped up like this, is that a chance to make profit? If the market's running up nicely, is there a chance to make profit? The answer is obviously yes, but the reality is most trading takes place with momentum. So if the markets are moving in a particular direction over a period of time, it tends to make for slightly easier trading circumstances than perhaps this sideways movement punctuated by volatility. So there's opportunity there, but it's really not as simple as you might expect. So that's kind of been the story of June so far. As I say, a bit of a game of two halves, the upside, the downside, and we're actually sat somewhere in the middle. So not an awful lot to report at this stage, unfortunately. But I'll come back to the normal screen now.
Yeah. Okay. So was the drop a few days ago, that kind of coincided with the equities market, didn't it?
Absolutely. So there's such a degree of correlation now. Okay, so there is a degree of correlation, and there's also an inverse correlation. So what we're seeing is trigger events. So global markets on Monday morning had a bit of a reality check. Just before the weekend, you've got the UK releasing 20.4% down GDP in April. Markets kind of just took a bit of a stock check and went, my goodness, we're not out of the woods here. So everybody's kind of coming out of lockdown in Europe to varying degrees at varying speeds. But the reality is that it's fair to say that we're not out of the woods. And I think Monday was a real reality check. It was just, hey guys, the economic downturn here may not even be realized. And it kind of harkened back to credit crunch times, 2008, 2009 times, when it felt like, oh, we've played it out now. The market's given it up what it's going to give it up, and we're in this recession, and yada yada. And then it kept on going down and kept on going down. So it had that kind of feel on Monday morning. It triggered Bitcoin to drop down. Global markets, as well as the crypto markets, have recovered back up and stabilized. FTSE up about sort of 6.2, 6.250, something like this, after dropping back below the 6,000 sort of support line, what was a pre-resistance line. So overall, there is some correlation, but what we normally find is after the trigger event, which will be Monday, they then tend to go their own direction. So Bitcoin will kind of play its own game now compared to global markets, in my opinion. So
yeah, I kind of felt like that as well, that it's whenever there's a big noise, a big crash, kind of a boom, then everything kind of does the same thing, but the echoes of that boom aren't the same. It's not like, we hear boom and we all run for the hills, but then the people that have Bitcoins and Ethereum in their pockets, they say, whoa, wait, I don't have to go quite so far into the hills, or maybe I'm better off, and that's going to kind of segue into our topic for today, our main topic.
That's a great analogy, though. I love that. The sort of ripples, the sort of aftershock tends to not be quite as great in the crypto market because, as we've touched upon, I think last week, you've got global markets have exposure to everything, to oil, to airline stocks, travel stocks, hospitality, everything that's been hugely affected by the current situation. And Bitcoin simply doesn't have that exposure. Cryptos don't have that exposure. So there's always going to be an knee-jerk reaction. I was fearful. Oh my goodness, markets taking a downturn, back to cash, everybody hitting stop losses, getting out of trades, this type of thing. But you're 100% right that then everybody in Bitcoin or in crypto kind of goes, yeah, we haven't really got exposure here to these issues. Life can return back to normal, and that kind of happens.
So this is a great way to segue into today's main topic, and the main topic today is I was reading Business Insider the other day, and I sent Stuart this article, and it's a guy named John Hussman, who is a hedge fund guy, I guess, or something like that. He's moving a bunch of money, and the title of it was "There's No Natural Limit to the Stupidity of Wall Street." A notorious market bear breaks down why we're not witnessing a recovery and warns that extreme valuations suggest a 66% drop. Okay, now maybe that is it's Business Insider. They want to get clicks. They got my click. Okay, so I'll take my hat off to them for that. They did a good job on their clickbait there. But then he goes into quite an argument and an analysis of why he sees this possible real another 60% drop in equities markets just around the corner. And you read a little bit, and his history isn't so bad. I mean, he found a few of them in the past, and he was right. So that was that kind of got me thinking. Well, maybe equities and stocks are riskier investment right now than crypto. And what do you think, Stuart? Could there be something to that?
Yeah, I mean, I think, as you mentioned, he's got a previous track record that can't be ignored. So bears notoriously after the event, or look like heroes because they're kind of calling the crash beforehand, then it happens. for long periods of time, they tend to be sort of talking a little bit into the wind a touch until the event happens. And history, cyclical history, will dictate that all markets have corrections. They have the boom and bust, that they're cyclical. So if you are a constant bearish commentator, at some point it's going to come true. So that's the initial viewpoint. However, this guy is very credible. This guy really has made the calls, and importantly, he's made the calls he's actually put a value to those calls that have pretty much borne out. So he knows what he's on about. What he's also done is he's got proprietary calculations that he's formulated for himself about things like market capitalization, this type of thing. And just from his opinion, and you can kind of understand where he's coming from when you start looking at the numbers, he believes that particularly US stocks, the S&P 500, are particularly overvalued at the moment. And outside of the correction that we're seeing due to the coronavirus outbreak, that they are due a correction anyway. That also is supported by the idea of we're on a very extended cycle now. You know, a typical financial cycle is 8 to 10 years between sort of the trough and the peak, the next sort of start of the collapse. And we're now sort of, getting close to 11, 12 years now. So there's a couple of things in his favor there. One of them is the cycle, and the other one is that they do look, pretty much overvalued. So coming back to the point you made, are stocks and shares riskier than cryptocurrencies? And there are actually two answers to that, in all fairness, Dennis. The first answer is, by their inherent nature, stocks and shares are they're exchange driven. They are very heavily regulated, and therefore there is a degree of safety because of that regulation. Nothing could really be done behind closed doors. There are what's called over-the-counter transactions.
Sure.
OTC
the
transactions.
famous pink sheets and all of that. Yeah.
All that type of thing. Dark pools and yada yada again. But the reality is, for Joe Blogs, you and I, going and buying shares, it's a heavily regulated environment, and everything's, there's a lot of counterparty. There's no counterparty risk from our side. If we want to go and buy, let's say, Barclays shares, we're able to do so very readily and in a pretty safe way. When we talk about cryptocurrencies, what's very attractive about cryptocurrencies is also the thing that you could perceive to have a higher level of risk. And that's the fact that they're decentralized and they're largely, if not totally, unregulated. So therefore, there is, I guess, an inherent risk, but I believe that that's very different to investment risk. And then, which comes to the second part of the answer, which is investment risk. For my mind, there is absolutely no difference between trading stocks and shares and trading cryptocurrencies. There's another part to that. There is a volatility side of things. And if you're trading stocks and shares, and I'll keep talking about Barclays, I'll explain why in a minute, because it's a bread and butter. We know who Barclays are. They might move by 0.5%, 0.25% per day. In extreme circumstances, as we've seen over the past couple of months, they may move by 5 up to 10% per day, but very, very, very unlikely. And there's also breaks at different exchanges when they hit a certain move. They get suspended from trading for 15 minutes till the order book's sort of squared off and things resume. So there's a lot of controls in trading stocks and shares, especially at the liquid end, the Dow, the FTSE 100, even the S&P 500. However, volatility aside, that's where they differ. If we look at risk, there is very, very little difference, and I'll explain why. So I'm just going to share my screen again here, Dennis, if that's okay.
Sure.
Hopefully everybody can see the same chart that we had before, which is the price of Bitcoin. Is that okay for everybody?
Yep, it looks good.
Cool. So what we're seeing here is effectively a 2-hour chart now. And what we're looking at is 2020. So basically what's happened this year. We can see the price of Bitcoin running to the upside to begin with, catching a cold here about mid-February, dropping away pretty sharp until around about sort of mid to end of March, and then recovering up quite nicely. So what we see here is a reaction to the coronavirus outbreak and the recovery back up afterwards. And in between times, pretty choppy. This is the volatility. This is prices going up and down in fairly quick order. What I'm going to do now is compare this to Barclays shares. We've just been talking about them, and it's fairly easy then to just have a bit of an idea as to what's going on. So this is the same time frame. The orange line is the Barclays share price, and the other line is the Bitcoin price. What we can see is a bit of correlation around about here. The middle of February, prices drop away, and then subsequently a bit of a recovery back up. But importantly, a vast difference on outcome from the start of the year. If you'd put all your eggs in one basket, which we would never advise, but if you had, and you just put it in Bitcoin, by now you'd be up around about 29%. So you put 10,000 bucks in, you're up, $2,930. Great, over the course of the first 6 months of the year. If you'd done the same with Barclays shares, you put 10,000 bucks in, you'd be down 32.5% by now. So if we're talking about risk, investment risk, at this stage, just as a snapshot for 2020, two very different outcomes. And you could conceivably suggest that for 2020, Barclays has been a much greater risk than Bitcoin to actually trade. Now, in between times, the movement in Barclays, we can see here, besides these sort of strong moves down as the coronavirus outbreak kicks in, have been relatively modest, very small moves, little bounces up and down. Whereas Bitcoin, you can't deny it, it jumps by 5 to 10% per day regularly. There's very few days go past that Bitcoin doesn't make between 3 and 5% as a move. It's fairly typical. So if you're trading, and that's what we do here at Blockman, you have to be nimble, you have to have very stringent risk management, and you have to be up on your toes, watching the markets 24/7. If you're investing, looks great, doesn't it? A nice overall long-term uptrend, up 30%, 29.5% for the year so far. So going back to I'll come back off that chart for now. Yeah, going back to the original question, which is riskier? Well, for 2020, Barclays. Simple as that.
Yeah, and if you take into account, Mr. what's his name, Hussman here, who says there may be another 60% downside to the equities market, then you start saying, wow, maybe equities is a really bad thing and I should stay in cash. But then you say, but wait a second, hold on. We have, Mr. Boris Johnson and Mr. Donald Trump and company, and they're just printing dollars and pounds sterling like all get out, right? I mean, they've gone hog wild crazy, as they would say back in New Mexico, where I was born, printing money. That's not happening in Bitcoin. That's not happening in Ethereum. They're actually making less Bitcoin right now. The supply is going down. You start adding these factors together, and somebody could make a reasonable argument that, while it's true that I'm not ever going to say that grandma should be putting her pension money into crypto. But she shouldn't be putting it into stock market either, probably. She should be, putting her money into something that's going to give her keep her alive and healthy for the rest of her days, right? Unless she's got lots and lots, unless maybe she's the, Queen Elizabeth and she's got plenty to play on the markets, right?
It's for sure. And I mean, the reality is that you've touched upon almost everything there that's correct. If you are investing, it's about a balanced portfolio, and that balanced portfolio should kind of reflect your attitude to investment risk. If you are, at the more tolerant end of the risk matrix, then you do want to be looking at shares, and you do want to be looking at cryptocurrencies to form a fairly substantial part of your overall investment portfolio. I've touched upon Barclays there. There are other shares that are going to be performing very well during these times. Household goods, supermarkets, online supermarkets, Ocado, this type of thing. And there are going to be shares that are in the doldrums, for obvious reasons, airline stocks, etc. So it's about balance. If you're at the tolerant end, absolutely, cryptocurrencies and stocks and shares should form the major part of your portfolio. If you're at the slightly, I think what the example you gave was a sort of more elderly lady with perhaps a decent size portfolio, but perhaps a slightly different attitude towards investment risk. Obviously, you would want to be in more sort of managed unit trusts. You'd want to be in cash instruments. You'd want to be in high interest accounts, this type of thing. You may still have a small proportion of your investment portfolio in shares and cryptocurrencies, but it's just about your risk profile and about your time horizon. If you're looking for very short-term liquidation of money, you need to just be in a high interest account. If you're looking for a more mid-term to long-term play, then you can suffer a little bit more at the other end, the investment risk. Going back to Barclays shares, I don't want to sort of belabor the point, but we saw the chart there. That they got down as low as sort of 85 pence. Now, at 85p, if your time horizon is 2 or 3 years that you don't need the money, buy Barclays shares. Are they going to be 85p forever? Absolutely not. Could they still drop down to 50p, 60p? Absolutely. But the longer term view of this, as has been seen time and time again with market corrections, the price will come back. So if your time horizon is longer, 2 to 3 years plus, and you've got a tolerant attitude to risk, then absolutely you should be in stocks and shares, and you should be in cryptocurrencies.
Cool. Well, and I'm not going to go any further on that because we're foreshadowing a bit. I think next week we're going to have something really exciting to share with people that I know that Blockman's building. Where my team is helping out, and we'll probably be talking about that next week. So, Stuart, any kind of recommendations on the short term right now? Are there anything going on out there in the markets that, because you've talked about Bitcoin and we've talked about Barclays, but crypto is a big there's an awful lot going on, and there's a lot out there. Any secret sauce or anything that you think that people now's a good time to look at?
I think the answer is, as per the chart of Bitcoin, to make a call that something's going to really accelerate and jump out of the page right now, I think would be wrong. I think to say put your eggs in this basket would be wrong. I think the honest answer is this is a great opportunity. Markets are moving a lot, but you have to be nimble. You have to be very sort of watching things. You have to have stringent risk management and discipline. So the takeaway from this is not so much buy Bitcoin because it's the next big thing and it's great. I think that there's a lot of opportunity on the downside still at the moment. I think Usman is quite correct there that there is the scope there. So I think there's opportunity. I've identified a couple of levels there, 9.6 as resistance on Bitcoin. And by the way, I talk about Bitcoin because that's what we trade. Here at Blockman, we're cryptocurrency. That's what we're about, and most people will be aware of Bitcoin. We've got a nice little range there at the moment. If it drops to about 9,000 and holds there, you'd be buying in. You'd certainly be having a go at that stage and getting your limit set for 9.6. So there's a potential nice uptick there. Really, you're talking about sort of 7.5%, fairly easy money to make. If we get a drop back down to 9,000, if it breaches the 8.9, it could drop quite a bit further, to be fair. But I think if it dropped down there and you had a buy order in place at 9, sell it back at 9.6, you've got a nice 7.5% there. So certainly that's what we're pinging.
And you say that, and people that are in crypto, they just kind of take that kind of as a that's kind of the way things go. Yeah, that's a good idea, and then they don't even blink their eyes hardly. But I mean, in the real world, I mean, you say, oh yeah, you could do this and maybe make 6-7% in a week or in 5 days or in a day, and they'd go crazy. I mean, if you could just do it every day,
I think after so my background for years and years was in traditional stocks and shares, FTSE 100 shares, to be fair. What was really exciting was how fast cryptos move, and that's really what got me into it in the first place, because it's great. But you are right. I've probably got a bit blasé myself there. Oh, he makes 7.5%. You know, I know seasoned investors that would be incredibly overwhelmed to hit 6% on an annual basis, and to hit that consistently, they'd be overwhelmed. Whereas we're talking about doing it, as you say, in maybe 4 or 5 days. So that's not to say that the other side doesn't also hold true. And I'm a great believer in balance and talking about risk. You know, we're talking about it.
Definitely.
The price can go from 9,600 back down to 9,000 just as quick as well. So it's that's what I mean about risk management. So what a lot of people seem to miss in cryptocurrencies is trading strategy, trading discipline, stop loss orders, which are automatic sell orders if you're long of the market. So if you get in at 9 and the price goes up to 9.2, put an automatic sell order at Binance or BitMEX or whichever exchange you use, let's say $9,000 again. That way there's no risk. The price gives it up and drops back down through. You haven't taken a loss on the trade. And that's what a lot of people miss. I know a lot of people buy Bitcoin, but not a lot of people seem to sell it or trade it. They seem to buy it and just hope for the best. They don't seem to sort of like put risk management.
Oh gosh, I'm sorry, man. You're talking right to me. I'm guilty as charged.
But in any particular way,
I'm guilty as charged.
The reality, you know, we deal with so many people that have got exposure to cryptocurrencies, and when the going's great, the going's great. When the going's not so great, which it can be equally, they tend to just wear all the pain rather than going, do you know what? I'll get out of this. I remember Bitcoin back on March the 12th. We were looking at the chart just now, and the price gave it up from $8,000 down to 4. We got kicked out at 7.8. Okay, we've taken a small loss, $200 per coin loss. But you just sat there then watching it drop and drop, and you think, well, the lower it goes, the more Bitcoin I can buy for my buck. So it's only if you're out at 7.8, you know. So
true.
So the key is the takeaway again is discipline. Have a strategy, stick to it, get your risk in place, and get your limit in place. Be happy with the profit you've taken, and give it a go. So yeah, it's an interesting market. It's a fun market.
I totally agree. I think we're really good for today then, Stuart. I think this went really well. We will have an exciting topic for next week as well. And yeah, thank everybody for signing in. We haven't had any live questions come up, but if anybody has questions for us, they want to get Stuart's expert opinion. You can have mine too, but don't trust it for anything by any means. Marketing or business, then maybe we could have a go. If you want to talk trading and investing, don't listen to Dennis, okay? You listen to Stuart. He's the guy. Yeah, we'll be back next week, same time, same bat channel. And yeah, thank you, Stuart, for being on.
No problem at all, Dennis. Thank you very much for having me. I really appreciate it.
Thank you. Let's talk to you next week.
Okay. Cheers, everybody.
Cheers.